You bought insurance to protect your family. Turns out the fine print was designed to protect the company from you. Somewhere in a drawer or buried in an email you never opened sits a document that decides whether your claim gets paid, and it was written by lawyers whose entire job is making sure it doesn't. A house burns down in Texas. A roof collapses in Ohio. A father in Georgia gets diagnosed with cancer, files a claim, and gets a denial letter citing a clause on page 47 he never read, because who reads page 47? This isn't an accident. It's an industry. In 1945, Congress passed the McCarran-Ferguson Act, handing insurance regulation almost entirely to the states. 50 different rulebooks, 50 different loopholes, and one very confused American public. Companies learned fast. Complexity isn't a mistake. It's a business model. The more confusing the policy, the more claims get denied on technicalities, the more profit stays on the balance sheet. Bobby found this out the hard way. He paid his homeowners premium every single month for 11 years, never missed one, never filed a claim. Then a pipe burst, water destroyed his floors, and the adjuster told him gradual damage wasn't covered, even though the pipe burst overnight. 11 years of payments, and when he finally needed them to show up, they pointed him to a sentence he didn't even know existed. Here's the part that should make you furious. This happens by design, not by accident, and it happens to hardworking Americans every single day, in every single state, in every single type of policy you can imagine. But there's a reason it keeps happening, and once you understand it, you'll never read an insurance policy the same way again.
So why does this keep happening, decade after decade, to people just like Bobby? Because insurance companies figured out something powerful decades ago. Profit isn't made by paying claims, it's made by denying them, just often enough that nobody notices the pattern. Internal claims handling manuals, the ones that have leaked in lawsuits over the years, have shown adjusters trained to look for any reason to minimize a payout before they look for a reason to honor one. That's not a conspiracy theory. That's been documented in court records against major insurers going back to the 1990s. Think about what happened after Hurricane Katrina in 2005. Homeowners along the Gulf Coast filed claims for wind damage, only to be told their destruction was actually caused by flooding, a technicality that shifted responsibility onto a separate, often non-existent flood policy. Thousands of families, already homeless, were left fighting paperwork instead of rebuilding their lives. It took years of lawsuits before some of them saw a dime. Bobby didn't give up quietly, though. He started digging through his policy line by line, and he found something most people never bother to look for: a public adjuster clause buried in the same document that had denied him. Turns out, homeowners have the legal right to hire their own adjuster, someone who works for them instead of the insurance company. Almost nobody knows this exists, because nobody's supposed to. That single discovery changed everything for Bobby. But it also raised a bigger question. If the system is built to keep you in the dark, how many other rights are hiding in your paperwork right now, waiting for you to find them? That's exactly what we're getting into next. Here's where it gets empowering, because once you know the game, you can actually play it. First thing, always request a certified copy of your full policy, not the summary they mail you. The summary is marketing. The full policy is the legal document that actually matters. Read the exclusions section first before anything else, because that's where companies hide the loopholes they're counting on you never finding. Second, know that you have the right to hire a public adjuster in nearly every state, just like Bobby did. They work for you, not the insurance company, and they know exactly which technicalities get used to deny claims, because they used to work on the other side. Yes, they take a percentage, but for a denied claim worth thousands, that percentage is nothing compared to walking away with zero. Third, document everything before disaster strikes, not after. Photos, videos, receipts, serial numbers. Insurers count on Americans not having proof, because we can't verify that is one of the easiest ways to shrink a payout. This habit alone has helped policyholders recover tens of thousands of dollars they would have otherwise lost to a single denial letter. And finally, remember what happened after the 2008 financial crisis. When enough Americans got loud, enough regulators got embarrassed, and real changes followed, from stricter disclosure rules to consumer protection agencies built specifically to watch the watchers. Change happens when people stop staying quiet. Bobby didn't get lucky, he got informed. And now, so are you. If this opened your eyes even a little, hit that like button, subscribe for more videos exposing what the system doesn't want you to know, and drop a comment telling us about a time insurance let you down. Your story might help someone else fight back.